struggle with multiple time frame analysis, in this video, I'm going to walk you through how to make that easier. So let's just go ahead and jump right into the video. Okay, we are on New Zealand dollar CAD. I'm going to walk you through a trade that I personally took this week. It was my only trade that I took this week. And I'm going to walk you through how I use multiple time frame analysis. And if you replicate exactly what I'm about to tell you, multiple time frame analysis can be easier for you. Now, let's talk about what multiple time frame analysis is. All you're doing is you're taking one time frame and you are breaking it down. And we like to call this fractals or fractions. The best way to do this is make a list of all the time frames that you use. I like to use increments of time frames. So it's going to go like this: monthly, weekly, daily, daily 12-hour, 4-hour, 4-hour, 2-hour. So let's talk about why these increments of time frames are very important. You have your long-term swing trades, you have your mid to long-term swing trades, and then you have your short-term swing trades. So your long-term swing trades, which will be the monthly, weekly, and the daily time frame, those are trades that you're possibly going to be holding for a month or weeks. The daily 12-hour, 4-hour combination, those are time frames that you're going to be holding for weeks or days. And then you have the 12-hour, 4-hour, 2-hour combination. Those are time frames that you're typically going to be holding for less than a week unless consolidation hits. But what we're doing when we look at these time frames is we're saying we don't need every single time frame to place one trade. That's not what you want to do in this market. What you want to do is go to the time frame that is trending, where you can see it and it's less noise for you. So here's an example, okay? I'm going to use a combination of the 12-hour, 4-hour, 2-hour combination. So let's start on the 12-hour time frame. Now, what I could see is that price has been falling this whole entire week since Sunday and Monday, which is up here. So you guys can see previously that price was pushing up. We had like a small low, higher high, then a higher low, then a higher high, and then price ends up reversing. Now at this time, I'm understanding that anything that happens after that is going to be price selling off. And so I can't see price selling off with the fluctuations on this time frame. So it's the first thing that you want to think about. What time frame can I clearly see fluctuations on? It's not this time frame. But what this time frame is giving me is an overall perspective of what's happening in the market. So I need this time frame to give me an overview, right? Now, once I get my overview, which is to sell, now I'm going to drop down to the time frame where I can see the fluctuations. This is where multiple time frame analysis comes into play. I just went from one time frame, now I'm using two time frames. So I'm going to drop down to the 4-hour time frame. Now I can see fluctuations. I can see where price made that higher high. I can see the higher low, higher high, now lower low, now lower high, lower low, lower high, lower low. So do you see where I'm going now with multiple time frame analysis? If you keep it this simple, the overall time frame is the time frame that's saying, hey, we're going up or we're going down. The next time frame is the one that says, hey, now you see the fluctuations, right? Now you're going to look at this one and say, okay, well, let me map out the trade. So I'm on the 4-hour, and here's where I'm plotting my lower high, my lower low. Now at this time when I placed the trade, price was already down here. It not pulled back yet. So now I'm thinking, okay, well, I know where I want to enter the trade, and I know how far I want price to pull back. So this is a part of putting a trade together. You got to ask yourself a question. I have two questions that I have my students ask. Where don't you want price to go? Where do you want price to go? And in this example, we don't want price to go past 0.83138, but we do want price to go up towards it, stop, and then continue to go down, right? So this is where I'm going to start using my position tools to say, okay, well, let's plot out where I want to enter the trade. I'm going to show you guys how to do that next on the next time frame. But if I were just to use this one time frame, then I would be using this candlestick here. So I know that I would have my entry, I would have my take profit, and I would have my stop loss, and then I'm going to look at my reward to risk. And my risk reward here is 1.51. I can't take this trade for me personally because it's not a 2-to-1 reward to risk trade. That's my minimum requirement. So this is when I say, okay, if my first two time frames give me what I need as far as my reward to risk being met, then I can enter this trade. But if it doesn't give me what I need to be met, I'm not going to enter this trade. I'm going to now drop down to minimize the stop loss to give me more exposure for my reward. Y'all see where I'm going with this, right? This is not complicated. The hard part is you actually doing it, okay? So with that being said, since I know where my stop loss will go, I know where my take profit will go, I'm now going to go down to the 2-hour time frame. And what this now does is it shows me more candlesticks, and it may show you more fluctuations. And this is the confusing part about multiple time frame analysis. If you first start from a lower time frame perspective without understanding the overall perspective, you can get lost in too many fluctuations. That's why we don't start low, that's why we start high. Now, the other part that's confusing about multiple time frame analysis is when you don't bring it together. You say, well, every time I switch time frames, something is happening, right? Something different is happening. So if you switch time frames too much, you could say, well, Shaquan, I've noticed that something different happens on every time frame, which is not true. What's happening is because you see so many fluctuations, you don't know what cycle of the trend that you're in. You don't know if price is trending up or down. You don't know if price is pulling back. You don't know if it's continuing its original trend. That's why we go up to the higher time frame first, which you saw me do, and I say, oh, we're selling off. So I want to be a seller. This to the third part of how multiple time frame analysis can be confusing, and it could be because you've not set yourself up as a buyer or a seller. And that's why, like with my strategy, TMP, I have my students set themselves up as buyers or sellers first, then we worry about the entry, and then we worry about the exits. So this is why having a trading plan with specific orders are very, very important, okay? So at this point in time, I know I'm the seller, I see the downtrend, I know where I want to enter. Now let me show you what multiple time frame analysis really is on this 4-hour time frame. You see this one candlestick right here. All we're going to do is break that candlestick down a little bit more. So I'm going to go back down to the 2-hour time frame. And these are the two candlesticks that you see. That's what multiple time frame analysis is. You're technically breaking down your entry candlesticks. It's not adding more support and resistance. It's not adding more trend lines. It's breaking down the entry candlestick. And if you're a part of TMP community, then you understand exactly what I'm talking about here. Okay. And this is why we keep our charts clean, and how we're able to keep our charts clean so we can see. But in this situation here, this is where I have where I want to enter my trade. It's still below 0.83138. I'm taking that candlestick and I'm breaking it down to where I want to enter my trade. And now look at the exposure. Instead of having a 1.51 reward to risk trade, you guys see how it got bigger, 3.69. Now this also matters with how you enter the trade. I said pending orders. So you could have a pending order, or maybe you could enter the trade manually, where in this case, price pushes up, you have a doji and then a confirmation candlestick, and then this limits the exposure again, but the reward to risk of this one, if you entered on the confirmation candle, is a 1.8 instead of a 1.51. This is just another way to say, let me use multiple time frame analysis in this simple form, looking at your highs and then looking at your lows and then breaking your entry candlestick down instead of trying to use levels. So this is another way to look at it. And this is based on supply and demand as well, because there is a difference between how support and resistance traders look at their charts, trend line traders look at their charts, and then supply and demand traders look at their charts. But this is just my personal point of view. I was able to enter this trade using this simple technique of multiple time frame analysis from the 12-hour, 4-hour, 2-hour combination. Now there are times where I may just use the 12-hour and the 4-hour. There are times when I may just use the daily and the 12-hour, but I always use, for long-term swing trades, monthly, weekly, daily together. Anything analyzed on a monthly and weekly is always entered on the daily. That's really important to understand, because the more you break down a time frame, your trade may not be triggered. And that's something that you want to keep aware of. If you already got your overall analysis and your time frame where you want to enter and it's super clear, keep it there. There is no need to keep dropping down. So that's a good tidbit for you if you see that your orders are not getting entered. All right. Now, every order won't get entered, even if you do good analysis, because there are sometimes our trades just won't trigger because the market didn't pull back enough. I can give you guys another example. I was waiting this week for price to pull back after this bullish candlestick up into this price range here. below 0.83630, and we never got there. Instead, price pushed up and then it pushed right back down, and it created another trading opportunity. So that's another reason why we want to be on these charts, and you want to have a routine. Like I got asked this morning on Instagram in my DMs, hey Shaquan, do you have a daily trading routine? No, I do not. I just have a time when I come to the chart. I see if I have something. If I don't, I leave it alone. If I do, then I set it up and I walk away. And I'm getting better at doing that now, ever since I decreased my watch list. So it's getting better. And then there are times when, I don't do it, and then that's a fault of mine. But when it comes to multiple time frame analysis, you really want to make sure that you're on your game and you're updating your chart in its simplest form. And if you like, use those time frame structures that I gave and then back test it and see how it works out for you. And if you follow it just like this, no matter what your strategy is, or if you want to adopt and learn my strategy, which the link is down below to learn my strategy, then feel free to do so. And then when you're using these time frame combinations, you can take trade setups just like this one. I hope you guys enjoyed this video, and I hope you learned something. And if you did, what's your takeaway? If this is a strategy that you're wanting to learn, if you're like, man, it's simple, it's easy, I get it, then click the link in the description to sign up for the community, where I do share my trade setups. But for the most part, we're talking about life. We're talking about trading. We're talking about strategy. We're talking about back testing. We're talking about mindset. We're talking about psychology. We're talking about how it feels to live a life as a trader on and off the charts. Because I find that sometimes in communities, all we talk about are the charts. But there are times when the charts affect our life and our life affects what happens on the chart. And we got to have grown folk conversation. And I love grown folk conversation. And so if that's something that you're looking for, then join the community down below, learn the strategy, come in, ask questions, get clarity, get help. Okay? God bless you. Have a great day, you guys.